Hello everyone, this is Matthew Frailey, founder of BreakpointTrades.com, founded it 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which is my passion. Our 21 SPY ES mean reversion systems, and of course our amazing KISS systems. By the way, some amazing trades on the mean reversion systems that went long last Friday. Sent out to our subscribers. Look at these nice trades. Excellent trades here. Still have an open trade on the RSI 40 system. I'll get also the KISS systems that have been doing well, especially the high performance. I'll get back to all that. But let's go ahead and get back. Oh, before we get to that, let's get back to this newsletter at hand. Remember, if you're just on YouTube and you're not a subscriber, consider subscribing. Go to our page. Click on the enroll button. Our best membership is our 6-month membership. That gives you the same thing as all the other memberships. The only difference is you get about a 40%, 50% discount over the standard monthly. So you get a big cost savings there. Okay? You get orders of magnitude more value by subscribing to us than you do on YouTube. Okay, so back to this video at hand. It is September 11th, guys, 2024. It's the evening. And this is the back-end recorder for our website subscription service. I'm going to go and get that recording started now. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, September 11th newsletter. Tonight's newsletter, as you can see, divided into 6 major sections. Same theme as I always keep. First off, do our opening statement here, talk about the market, then I'm going to move on into some admin things, especially our mechanical systems, which have been knocking it out of the park, our mean reversion systems. Hopefully you guys took those trades last Friday when a bunch of those went long. 3 of those mean reversion systems went long on Friday. Awesome trades. You could have easily paid for the membership for years just taking those trades. We still have 1 open trade. Again, I'll get back to that. Then we move to the general market analysis, look at a few indicators, sectors, dollar, commodities, precious metals, and of course trade ideas. I didn't add any new trade ideas tonight. But anyway, guys, regarding the market, again, it's September 11th. And by the way, in case you didn't know, and Steve discussed this on the weekend, September 11th had been up the last 17 years, every single year consecutively in a row. Well, the market, no exception, was up again today. S&P was up about 1.1%. So that's 18 in a row, guys. Think about that, 18 in a row. So the market had seasonality at its back. That said, crazy volatility though. So overnight, futures were up and they were trading up pre-market. Then we had the CPI data come out. Market futures quickly sold off on that. Then they quickly recovered, made another high. Then when the cash market opened, the S&P fell 92 points from the open. Okay, from 54.98 to 54.06. Then it bottomed about an hour and a half after the cash market opened. Then it recovered all the way. Then added in 50 additional points on top of that for a 150-point range day. Okay. Otherwise, like I said, we've been viewing this pullback as a wave 2. So we view the wave 4 pullback on the August 5th bottom. That's a wave 4. The first rally up lower high is a wave 1. And this higher low, wave 2. And if that's correct, guys, this should be in a wave 3, go to new all-time highs. All right. Almost every single commodity today was up, save for coffee and gold. Gold was flat. Yield curve, remember, is still in non-inverted. All right. Again, everything's in an uptrend. The market, all time frames, long term, intermediate term, short term, etc. Again, today we had the CPI data, which came in hotter than expected. Tomorrow, Thursday, we have initial jobless claims. We have the PPI inflation data. That's the producer inflation. CPI is consumer inflation. So that's the producer. Then we have natural gas inventories. All right, moving on. Let's show you what the market did here. So image number 2, here's a 5-minute view of the S&P. Okay. Again, this is a bit compressed, but it's compressed because of the huge range we had today, 150 points. So you can see, again, this doesn't show futures. Remember, futures were up overnight, then they pulled back on the CPI, then they rallied again. But you can see here on the cash market, We opened pretty much at yesterday's close, sold off 90 points, 92 points from that high, bottomed about an hour and a half later, recovered all that loss, then added about 50 points on top of it. Image number 3, here's a 15-minute view of the S&P. Great example just of supply and demand. So you can see supply zone back there. Previous week where price stalled from, then another supply zone where price stalled from, yet another supply zone, which actually capped price initially yesterday, September 10th, before pulling back, three-wave pullback you could see there, then rallied again into the supply zone by the close yesterday on Tuesday. Then this morning, dumped hard from that supply zone. Remember, there was an open gap. Market likes to fill these gaps. Well, it filled that gap this morning. So that was a magnet. But we had a swoosh right to the downside, 90 points, very quickly. Recovered, double bottom there, you could see, then basically V'd up and off to the races. And this is typical of this market lately, guys. These V moves, in the past, long time ago, before you had all the algorithms and algo trading, stuff like that, you didn't get a lot of these V movements like this. But anyway, great example. By the way, remember, the supply zones, demand zones, I'm going to eventually do a tutorial on that, but extremely powerful. So they're formed on a break of structure, then a bounce reversal. So for example, you got a low here, that took out that last low, it's a break in structure, then you rally up, have a couple dojis, form a lower high, that's like your supply zone. Okay, same thing here. Break a structure from this previous low, get a rally, lower high, that's such your supply zone. Now the fact that we broke over that last high, break a structure. Why is that important? So the next pullback, higher low, will set a new demand zone. You see how that works? Next, image number 4, here's NVIDIA. Great example of supply and demand zone. Okay, NVIDIA, you could see, rallied off that small demand zone back in early August. Rallied up, stalled at that supply zone. Sold off, found support in this demand zone last week, stayed around there, and big rally today, up 8.2%. Big day for NVIDIA. Again, you got a great opportunity to buy in the demand zone. We've had this chart in place since, for almost 2 weeks. We've marked this demand zone. So you get plenty of opportunity to buy NVIDIA in that demand zone. Now you can see it closed right around just below the 50-day moving average, 20-day moving average. We'll see if you can clear that. That's your initial resistance. But beautiful example of just price ping-pong in between supply and demand zones. Next, let's talk about the mechanical system. So image number 5, here's the mean reversion systems for SPY and ES. So last week, 3 of these systems went long. They actually went long on Thursday. We didn't take that Thursday entry. We took the Friday entry. Friday entry ended up being the bottom of that higher low. So the trend pullback system triggered on the SPY, ETF, and ES futures. We trade MES. And S-Trap triggered on SPY. So anyway, S-Trap closed yesterday for a winning trade. Remember, we took it on Friday. And then today, the trend pullback exited on SPY and on ES futures. That said, we decided to keep half of the trend pullback with a stop. So I'm going to manually trade that until it gets its next exit. But great trades. If you took these trades, guys, even just modest position size, you'd have easily paid for your subscription for years. So great example of these mean reversion systems with about 90% winning trades. Remember, they buy pullbacks and uptrends. They short rallies and downtrends. That's what they do. And we have 21 of them. Image number 6. So here's the SPY and ES mean reversion system trades that have occurred this year. So for 2024, there's been 21 mean reversion system trades for SPY. There's been 24 for ES futures. So even though I'm running the same 21 systems here, because they're different instruments, even though they're highly correlated, obviously, you're still going to get different trades because different prices. All right. Anyway, 21. So this has been a strong year for the market, so the mean reversion systems haven't been that active. In volatile years, bear markets, these do a lot more trades. So 2022, for example, that bear market, these systems did about 90 trades each for SPY and ES, and they knocked that out of the park. But that's fine if they've been less active this year. Remember, that's why we have the KISS trend systems. They catch the uptrends. Anyway, you can see here the trend pullback on SPY exited half today. Just on $10,000, made $269. We still have half open. Yesterday, the S-trap closed out, right? And for ES futures, we had the trend pullback exit today, made $1,445. We still have 2 contracts on the RSI 40. Next, image number 7. Here's the VIX system. This is the VIX S&P Bollinger Band system. And this also went long last week on Thursday, Friday. Closed out today as well. This system has a profit factor of around 8 with about 80% winning trades. It trades sort of like a mean reversion system too. It doesn't hold in trades for long periods of time. It's in cash a lot. But, it takes strategic trades. It does very well. Next, image number 8. Oh, I meant this got out of order. This is the trade statistics for the RSI 40 system that's long on ES futures. You can see profit factor of 46.5. Awesome. 95.3% winning trades. Goes back to about 1995. Average hold time on this is about 12 to 13 days. Moving on to the other systems, chart number 9. Here's the KISS systems. All right. This is the standard daily here. So Meta had a new smart trailing stop today. Nothing else there on the BPT basket anyway. There's going to be a lot of changes in the other baskets, but just on the BPT basket, we just had Meta today. Otherwise, you can see what's open. Really nice trade there on AT&T so far. That trades up almost 26%. TMF, that trades up 21.6%. Tesla, it's up 10%. And the last trade made 23.7%. Image number 10, remember we got the high performance beta KISS systems, which are intraday based. They've been very active lately. Remember, if you've added your phone number for SMS, make sure to set favorites to receive alerts. Guys, we are going to be launching this fairly soon as a subscription service, okay? Hopefully this weekend. Anyway, but you can see a lot of action today here. Being lower time frames, they take more trades, set stops more frequently. But, a lot of these can hold for weeks at a time. So they're not, short-term day trading systems. But the text messages let you know. Anyway, nice to see this off the ground. Nice trades, too, also on uranium lately. All right, that does it for the, admin stuff and the systems. Let's move back to the general market newsletter. So image number 11 shows the index sector table and what transpired today. So you can see all the major indexes up very strongly. Clearly tech leading, NASDAQ, big cap tech up 2.2%. So more than double the S&P, while the Dow, Russell were barely up. Everything's up now for the week as well, with the big cap tech up 4.2%, 4.4%. As far as the 21 market sectors, despite that huge update, it wasn't broad-based. There's about 50-50 up and down here. Clearly the strength in the technology, as you can see. Technology, semiconductor, 3.4 to 4.9% respectively. Slight weakness in transports, banks, financials. Energy still remains weak. Consumer staples fell today. That's a defensive sector. It's actually good to see that. Currencies, US dollar up 0.1%. Bitcoin slightly down, up nicely for the week. Commodities had a pretty good day here. Really only small pullback here on coffee. Gold was flat, but nice moves here in commodities. Bounce back a little bit in crude oil. Uranium, a huge day, 5.2%, up 9.3% for the week. Rallying off long-term support, which I'll show later on. Also, we got a few high-performance KISS systems on uranium that are been long, that are up very nicely. Precious metals, mostly to the upside, though gold was flat. And image number 12 shows the economic news calendar. Like I said, we already had the CPI today. Market had, some whipsaw up and down action on that. Tomorrow we have the PPI, that's producer inflation. So we'll see what that looks like. Natural gas inventories as well. And initial jobless claims, of course. All right, let's jump to these index charts. So chart number 13, here's the daily view of the 5 key major indexes with simple Bollinger Bands. You can see price tagged the lower Bollinger Bands this morning on that sell-off before bungee bouncing right off of it. In fact, the Bollinger Bands are pitching here. You see that on the S&P and Dow? That means a bigger move's coming. Let's hope it's to a new high, which favors our analysis. Next, moving on to the S&P 500 chart. So chart number 14, here's the daily KISS system for the S&P. So remember, we had a nice pullback. So first off, after the August 5th bottom and V rally up, nearly back to the highs, we had that DeMark 913 combo, which was a good area to exit. Market had a nice pullback, but it held. This KISS system still stayed long, never hit that smart trailing stop, got pretty close, and we're rallying now. Now we'll see if this can build. We need to get above that ATR. That would be the next step for the bulls. Image number 15, here's the 4 time frames with some of these indicators, such as the ATR, moving average ribbon, and of course the cycles. So again, on the daily, besides that DeMark 913 combo, you had that resistance cycle where price perfectly pulled back from. And look where price has bounced from. You had a support cycle yesterday and a nice rally today. So beautiful move on that with those cycles. I love that cycle indicator. It's not perfect, nothing is, but it's a pretty good guide. You can see the support cycle on the half day the other day. We rallied from there as well. Moving back to the standard chart, chart number 16, here's the daily view of the S&P. So this is our favorite count, guys, right? Wave 3 high at the July highs. We had a simple ABC 3-wave pullback into the August 5th bottom, where that VIX spiked up to 66, right? 3-wave pullback, clearly an ABC. Wave 4, big rally up, not quite back to the highs, almost. I'm going to count that as a wave 1. This potential higher low pullback, wave 2. If this is the correct count, this should rally strongly in a wave 3, but we'll see. Onus is on the bulls, but that's possible. So if you're long here, easy stop would be basically around today's lows. Chart 17, here's a 2-hour view of the S&P. So we had that range that we were trading in, which we broke down from last week, filled the one open gap. We didn't quite make it to that next gap. Then we had that big volatile action today, then rallied up. We're now back testing this previous range support that's now resistance. We'll see if we pause here or if we can break it. We could also reverse right off of here. But let's see what happens with this tomorrow. Chart number 18, here's a 60-minute view showing you the same thing. We're testing that broken range. Potentially that lower high double bottom was a wave 2. Chart number 19, here's a 30-minute view. One thing to note, guys, we had an open gap from Monday, which we filled this morning on that big plunge in the morning. That was a magnet, basically almost double bottom essentially, then rallied up. Remember, we stalled at the supply zone yesterday and this morning. Sold off sharply, filled that gap, and then rallying right back. So, guys, the fact that we took it out the supply zone is important because the next pullback and higher low will set a demand zone. All right, so that's what I'm looking to see on the next pullback. Chart number 20, here's the triple Q's KISS system. Now this one unfortunately did stop out, but it is what it is. It was a slight winner. System's done very well though, as you can see on those past trades. It's not back long yet. That said, it will go back long if this keeps going up. Right, ATR is just above. That said, the high performance KISS systems, guys, 2 of these are already long. So if you want, you think the Q should have been back long already, you could always check the high performance triple Q 78-minute and 65-minute. Both of those systems are currently long here. Okay. Image number 22, here's the 4 time frames. Just like on the S&P, you had that resistance cycle a couple weeks back where price stopped, and actually on Friday you had a support cycle, which held and we've rallied off of so far. Okay. Chart 23, here's the daily standard triple Qs. Remember, just like on the S&P, this was a 3-wave ABC type pullback. You see that? This isn't 5 waves down, it's 3 waves. Okay. 3 waves corrective, right? 5 waves is impulsive. 3 waves is corrective, right? That was the August 5th bottom where the VIX spiked to 67. That fear spike rallied up lower high. Didn't get quite as high as the S&P. Remember, it's been weaker. Sold off. Found support right around that 61.8 fib before nice rally today. Now we'll see if it can clear some of these 50-day, 20-day moving averages above. Chart 24, here's a 2-hour view. Remember, we filled that. The Qs filled all these gaps before taking out that supply zone. Today, finally, it did stall initially at it. The next pullback, higher low, should set the next demand zone. You could see you had a nice confirmed buy signal in the RSI trendline break there. Actually, a couple days ago. Chart 25, here's a 2-hour view showing the same thing. Chart 26, IWM small caps. Again, they're lagging a bit. There was an open gap which has been filled. Remember, last time they stalled at that resistance supply zone. Found support in early August at the demand zone. Now we'll see. You can see they had the 200-day moving average above. Maybe this forms some sort of coil. We'll see. Chart 27, here's the 2-hour view. Again, you can see how we filled that gap. Went a little bit lower, a little below that 61 fib before recovering. That low today had some RSI divergence and even some MACD divergence. So that does it for the market, guys. As far as market futures, ES futures tonight are down about 2 points. So pretty flat still. I'd expect tomorrow is probably a consolidation day, given after today's big rally. Next, looking at some of these indicators. Chart 28, here's the VIX melting down, as you can see. Chart 29, here's that 2-hour view of the VIX. Steve showed this on the Monday or Tuesday, or on the weekend, this 5 waves. And whenever you have 5 waves, guys, look for a reversal. And that's exactly what has happened. We've reversed from that 5-wave pattern. Chart 30, here's a 60-minute view. Does a good job about showing these gaps, right? Unfilled gaps down here. We filled that almost. We didn't quite fill that last gap. So we got a couple gaps here, one to the upside, one to the down. On a further rally, I'd expect to fill that gap. And if we go to new all-time highs, maybe those other gaps below as well. You can see how the VIX found support at the demand zone back in August. Chart 31, here's TLT 20-year bonds. Was up today, but pulled back. Little doji candlestick, indecision day. Chart 32, here's the 10-year treasury yield. Again, slight bounce. Remember, we had a nice little MACD divergence there at the low. Also, RSI divergence. It is quite oversold at the moment. Maybe due for a rally sometime soon. Chart 33, here's the weekly view of the 10-year. Remember this ABC 3-wave corrective pattern I've been identifying. And notice it's testing the top range of this demand zone to moving average and wave C. So I would eventually watch for a higher low on this. Too early to say if this is completed yet. And chart 34, here's the yield curve, which it closed at 1.00. So it hit a high of 1.02 recently. It was 1.01 yesterday and Monday. So back to 1.0. It's been inverted like for the longest in history, over 800 days. I think a recession is eventually coming based on this, guys. This has been one of the best predictors of recessions when it's inverted. And this has been inverted the longest in history. Looking at a few of these market sectors, just a few. Chart 35, here's XLK Technology. Again, big pop today of 3.4%. You can see it essentially held. Yes, it undercut the 200-day moving average, but it basically held around that 61.8 fib. I call that the master fib. Sounds like a rapper, but it really is a very important fib. And then we recovered that 200-day moving average. And so, of course, big move up today, testing the 20-day, 50-day is above. Chart 36, here's semiconductors. Nice rally right off that 200-day moving average. As you can see the last rally stalled at the 61 master fib as well, and 50-day moving average. Chart 37, here's XLP, consumer staples. Been a defensive sector, which has been very strong, which has bothered me on the market. But nice, now pulling back today. Now it did test the 20-day moving average. You can see where it found support. But we have divergence here. If we could see this start to pull back more, maybe that's a good sign for the market. You can see the MACD is trying to cross now to the downside. So momentum is waning. Chart 38, financials, pulling back a little bit off the highs, but well off the highs today. Kind of a hanging man doji. Chart 39, utilities. We redrew this as a wedge, still technically in a wedge. MACD, there is a little bit of divergence here. It's starting to lose momentum, but it hasn't broken the trend yet. Chart 40, here's XLE Energy. Energy area has been super weak. So is crude oil, and that's another potential recession identifier, just economic slowdown. But anyway, you can see it's got into this kind of demand zone, tested the bottom range, bounced off it a little bit, but man, it's been really down correcting since the April highs. Chart 41, here's the bullish percent energy index, BPNER system. It's the Renko chart. So remember, these bullish percent charts, guys, are normalized to 0 to 100. So that's all they can go. They're based on a percentage. So, it was very overbought there in April, May, up in the 90 percentile range. And it's down here, kind of oversold, but, still too early. In fact, there's a little sell signal there. Chart 42, here's a zoomed out view of the BPNR. Again, you can see, it's actually hit 100% quite a few times. And it's been much lower than where it is now. You can see it's been down there around, less than 5% or so. So, does it have to go back there this time? We'll see. Or maybe it forms a higher low here. But eventually, these are going to be a good value buy. But for now, they are downtrending. Chart 43, here's FXI, Chinese ETF. Little bound today. Now, this is quite aggressive, guys. I drew a sloping inverse head and shoulder pattern. So we'll see if that plays out. Where would your stop go essentially at yesterday's lows? So, if you think this is an inverse head and shoulder and this can work higher, you don't risk much, right? Your reward would be many, many times your risk. So it's a great risk reward. You can see also how price found support at the demand zone last time. Chart 44, DBC, commodity index. It's been very weak, as you know, lost that big support the other day. That said, we got a doji candlestick. We do have some divergence. And intraday, we have some active divergence on a 60-minute chart. So this may be set up for a bounce. Trigger would be over today's highs around 21.30. Chart 45, here's USO, crude oil ETF. Again, you can fill that open gap the other day. It's been very weak. Little doji inside day today, so indecision day. Wide moving average ribbon here, so it could be getting ready for a bounce, perhaps. Also, guys, the moving average ribbon, you can see how this is a great guide. Those last pinches, bearish squeezes, those end up being nice tops. Chart 46, here's crude oil on the daily. Remember, broke that coil a couple weeks ago. Today, inside day, but man, it's been super weak. Hopefully the Biden administration bought all their oil reserves back. If they did not, this is the place to do it. Okay, so if you're somehow able to talk to Biden or Harris or whatever, tell them buy that damn reserve, strategic reserve back, oil reserves. And chart 47, here's the weekly view. Remember, we were showing this coil forever. I said it looked weak because of the lower support. This broke last week, actually. Chart 48, copper, up a little bit today, 1%. You can see, otherwise, our favored views have completed a perfect three-wave ABC there in early August. First rally stalled at that first resistance area. Chart 49, DBA, agriculture, nice bounce back today. You can see you had the first squeeze pinch on the moving average ribbon. If you're long, where would be a logical swing stop go? Basically right at that higher low where you see my dotted line. I like the weekly. Here's the weekly. You have a potential completed ABC. If that's correct, this should go to new highs. Okay. Earlier this year, I pointed out the cup and handle, which played out fantastic. Chart 51 corn. I showed this wedge trade back in August. Great trade. Now it's been consolidating. Potentially could morph into an inverse head and shoulder pattern if it goes sideways for a bit. Chart 52 wheat. This area's been strong as well. Had a little nice bottom there, broke through resistance, back tested, found support. And the tradable ETF, WEAT, similar pattern as you can see. Chart 54, uranium. This is the weekly chart, up 9.3% for the week. You can see it essentially held that 200-week moving average and the weekly uptrend line going all the way back to 2020. Okay. Obviously, that head and shoulder played out, but this was major support here. And chart 55, the high performance KISS systems. We actually have 3 uranium systems here, a 65-minute, 60-minute, 78-minute. Which one's best? I don't recall. Remember, you can go there, look at the stats, look at the trades yourself. Otherwise, nice trades on these. 78-minute is up 9.2%, but all of these are up now. Moving on to crypto, chart 56, Bitcoin. Chopping around here a bit, still in the big expanded coil-like pattern. Chart 57, here's the weekly view of Bitcoin. Like I said, I still favor we formed a wave 4 low back there in July. If not, wave 4 could be pushed out. But either way, I'm looking for an eventual rally to new highs in that wave 5. Chart 58, US dollar. Bouncing up here a little bit. You can see I've marked this ABC pattern. You can see I rallied off that support back in late August. First rally up, wave A. First pullback, higher low, wave B. Now we're working on this wave C. Maybe it makes it to the downtrend line, 50-day moving average. Chart 59, here's the weekly view. Remember this pattern we've been favoring. So if this is the correct pattern, we're in this wave 4, which should eventually end. And then go down again in a wave 5. Precious metals, chart 60, here's gold. Essentially flat today. We had that wedge pattern, and it's just been going sideways since. All right. Again, long term, it's in an uptrend, but can we make another high here? We'll see. Eventually, it's going to need a pullback, which is fine with me, but for now, it holds up. Chart 61, there's the monthly view. Again, this is my bullish wave count. 1, 2, 3. We've been in the midst of this wave 3. When this finally ends, guys, I'm looking for a wave 4 pullback. You can see there's actually a demand zone right here. Then I'm looking for a new all-time highs again. Chart 62, there's silver. Silver had a perfect ABC 3-wave pullback into the August lows, where your stop should be on a swing. Right now, it's just been chopping around. Chart 63, there's the monthly view of silver. This is why I like silver, this big coil break. 4-year coil, developed over 4 years, guys. Eventually, I'm expecting it to test these upper supply zones. Chart 64, the last weekend, not this recent weekend, but the previous weekend, I issued Palladium. That's Palladium ETF. I said Palladium has been very weak, unlike gold. But it had a nice bottoming pattern. You can see nice bottoming coil. Testing the coil today. This thing's up 11.2% this week, guys. So hopefully you bought it, last week or even early this week. But now we'll see if we can break through here. Notice how tightly wound that moving average ribbon is. That means a bigger move is going to come in here soon. Chart 65, here's GDX, the miners, bouncing back a little bit today. But nothing's changed here technically. Let's move to the trade ideas. So chart 66, OSCR, one from Steve last night. So you wouldn't have seen it on YouTube because it was in our newsletter. Big breakaway gap, massive volume. So this has likelihood to follow through. Chart 67, Chubb. Remember, long idea mine back in August, had a great rally. That said, if you had a stop here, you'd have been stopped out of your remaining shares today. It's been a good trade, though. Chart 68, here's that 60-minute view. Remember I was pointing out this MACD divergence on the 60-minute time frame? So that ended up playing out, obviously. Jabber 69, TARS, inverse head and shoulder pattern from last week, continues to play out. Jabber 70, ABUS, nice pattern from about 2 weeks ago. Very tight little coil flag pattern, played out beautifully. Jabber 71, Duke Energy, other nice pattern from a couple weeks back. Very tight coil, played out nicely. Pulling back a little bit now. Hopefully took some profits before today. Jabber 72, AAOI, still very good setup. Still flagging here potentially out of this nice base. Here's some ones to continue to monitor. Jabber 73, YUMC, it's a Chinese play. Still has this kind of ascending triangle look. Keeps testing this resistance, pulling back. If it can break this, though, I think it's got a quick shot up to that 200-day moving average. So I still like this one. Jabber 74, Intel. This may be lower risk now at the bottom of this rectangle. You could just put a very tight stop at 1850. See that? Very tight. If you're right and this rallies back up, man, you got a super risk-reward ratio. Jabber 75, Nova. Trying to trigger here. This is from my Monday newsletter. Nice flag. First target would be filling that gap from May. Jabber 76, Nova. One from Monday as well. This rounded bowl pattern. And it had a nice coil. Look at the nice rally out of the bottom of that base of the coil. Jabber 77, Forward. One from Monday as well. Still in the same horizontal rectangle pattern here. Jabber 78, CHK, energy, natural gas type play. This to me, I bought this today. This looks like a low risk play. You got a double bottom, MACD divergence, RSI divergence. You could just set a stop at yesterday's lows. This looks pretty good down here, risk reward. Dividend plays. Jabber 79, TCPC. Remember, this pays about at current prices, pays up over a 14% dividend. The 12% dividend when it was back at the highs. So this pays, the ex-dividend date is September 16th, so you still have time to buy this thing. Jabber 80, here's the weekly view. Like I said, this weekly dividend play, it's been trading in a range here, like a channel. And it's kind of nearing the bottom of the range. That's why I like it here. I like some of these dividend plays after a correction, especially if they've been trading in a range like this. Doesn't mean it can't go lower to the bottom of the range, but seems lower risk to me. All right, guys, have a wonderful evening. We'll see what transpires tomorrow. Thank you for all your support. Trade our mechanical systems. If you haven't been doing that, they've been amazing. And if you're just YouTube, consider subscribing to us. Really helps us out. I think you'll be impressed. You know, you may be a little overwhelmed with the data at first, but if you stick with it, you'll get to it. We have so many subscribers, guys, that have been with us for 10, 15, even 20 years, which is honestly humbling to me. Can't believe that. All right. Have a wonderful evening. Take care.